Gold is down and oil is down. Good morning, I'm Joe Doe reporting from the NYMEX. Oil prices are again dipping for the fifth of 6 trading days as we continue to see a glut of oil builds. We have inventories due out tomorrow and we'll see what happens then. Turning to gold, gold prices continue to dip. We'll move to why that's happening in a moment, but I did earlier speak to Miguel Perez-Santalla. He's the vice president of BullionVault. They put out their gold investor index, which measures sentiment towards physical buying. We saw the index rise to 54.3, which means there are still more buyers than sellers, but he explained why it wasn't so strong.
They're holding on to their gold. There's no reason to sell at this point.
Why?
Well, I think that they perceive that this is nearer the bottom level of the price of gold. And if you notice, every time we see gold dip below, 1,300, we see a lot of fresh buying coming in. So, so if you're holding gold at 1320 or 1350, you're just going to keep holding it. Why jump in and out? Unless you're, a day trader. But, long-term investors don't work that way.
The highest the index ever came in was in September of 2011, up near 71. We've seen numbers come out the past few months, 53, 54, kind of hovering at that lower bound of more buyers than sellers. Are we going to stay around these type of levels for the near future?
I expect so, because I still see a lot of new investors coming into the gold market just to diversify and have an alternative asset. They don't have a lot of confidence in the government, and that's where they turn to. I mean, historically, gold has always been a place to put your money as an exchange of value from one item to another while you're hovering around waiting to decide how to invest.
Here to talk about the price at the NYMEX with me is Tom Vitiello of Aurum Option Strategies. Tom, it's always great to have you. So why are we seeing a move lower in trading today?
Well, a couple of things. I think there is some pressure on the ECB to maybe make a move tomorrow and lower rates because of the disinflation there and the lack of inflation and the drumbeat. Italy is complaining that a strong euro is very bad for them, and so I think that's a little bit in the price. And then also we had a positive ISM number this morning. So the good news is bad news for gold scenario, and gold came off on that because of the implications of when the Fed would taper. So good news is bad news for gold.
So then, in terms of the ECB, what do we have to have happen there tomorrow for some sort of movement in the yellow metal?
Well, if they don't do anything, I mean, you could get a little bit of a pop in gold, because I think there's a little bit of a dovish sentiment in the price of gold right now. I think they think that the Fed is going, the ECB is going to do something. If they don't, maybe you'll get a little bit of a pop. But it's very quiet here. I think that we're in a little bit of a no man's land in terms of the price. I guess you could say we're in that band of 1,300, 1,330. If we get below that 1,280 low of a few weeks ago, then there could be some action on the downside. But I think that we could be this way for the next few months, maybe till the end of the year.
Sure, and finally, when you hear about the Gold Investor Index of BullionVault saying that, there's still more buyers than sellers in the physical market, but we're still seeing kind of this lower bound of more buyers than sellers, and what does this say to traders?
Well, I guess what's happening with the physical demand, it's always determined by the price. And as price goes down, the physical demand steps in, satisfies the demand, and then sometimes it pushes the price up to levels where they kind of step out of it. But it's kind of a step ladder, though. We keep making lower lows. So as the physical demand gets met, we get a pop. It wanes. Then when it goes back down, those people are gone. So it has to get to another level for them to step in again. So we'll see when that stops, and then maybe the low will be put in place.
All right. Well, Tom Vitiello, as always, thanks so much.
Thank you.
That's what's happening here at the NYMEX. For The Street, I'm Joe Doe.